Are you hoping to retire within the next 5 years? Are you aware that taxes could be your biggest expense in retirement? Most people, they falsely believe that they'll pay less in tax in retirement. Now that's understandable because you're no longer earning a paycheck. But that won't be true for millions of hardworking Americans. The fact is, you could be paying even more tax in retirement because you could owe tax when you withdraw money from your IRA and 401k, tax on your Social Security benefits, tax on your investment income, and the list goes on. And as a result, your retirement savings could be a fraction of what they are today. I am Chris Abts of Cornerstone Wealth Management, and you are watching Redefining Retirement, and this is where you can count on straightforward and objective advice on the toughest challenges that you'll face in retirement today. And coming up on today's show, we're going to look at 3 retirement tax traps that could needlessly wipe out your hard-earned savings, along with some simple tax planning strategies to help you to reduce or eliminate these taxes in retirement. Here's what's coming up. You want to avoid taking too much risk to accounts that are likely some of your biggest assets that are designed to help you to pay for your retirement. The highest tax bracket, that was 70%, almost twice. So there's a lot of room where our government could make adjustments to the tax brackets. So the Social Security tax torpedo, it simply refers to the fact that each additional dollar of income in retirement makes 85 cents of your Social Security makes that taxed. I am really excited about today's topic. So sit back and relax. Redefining Retirement starts right here, right now. Saving for retirement is a great start, but it's what you do with your money that really matters. Success in retirement, it really comes down to reducing your taxes, generating your income, minimizing your risk, maximizing your Social Security, and more. Welcome to Redefining Retirement. I'm Chris Abts of Cornerstone Wealth Management, and this is where you can count on straightforward and objective advice on how to make the most of every dollar you've saved for your retirement. And today, we're looking at 3 retirement tax traps that could wipe out your hard-earned savings. So let's take a look at the first tax trap, and it's something that's on everyone's mind right now. You see it in the news. You've got potential tax increases literally right around the corner. You could be paying significantly higher taxes in the very near future. And on top of that, if you hope to retire within, say, the next 5 years, these higher taxes could leave you with a fraction of your IRA and 401k. And when we sit down and talk with families right here in Northern Nevada, they're concerned about this. But right now, today, while you may not realize it, taxes are lower today than they've been for over 40 years. But don't get caught not having a plan for this, because this could be changing very soon. So think of golf for a minute. Let's say you've got this sand trap, this bunker, and it's right near the hole. You're playing so well. You're almost to the hole, and then you get caught in that bunker, in that sand trap. Well, this tax trap, it's really the same thing. You're doing so well. You've saved. You're getting close to your retirement. And then you get caught in this tax trap. I don't want that to happen to you. According to Fox Business, our government, they've spent trillions of dollars on economic stimulus and infrastructure updates. And then there were the trillions of dollars injected into the economy just recently for COVID. But everyone watching the show, you're smart. You're smart enough to know that money does not grow on trees, and it must come from somewhere. Our national debt, it is skyrocketing. It's closing on $33 trillion. Somebody's got to pay for it. And of the 14 countries rated AA or above by Fitch, did you know that the United States has the highest estimated deficit as a percentage of our GDP, which is 6.5%? We also have the second highest interest expense as a percentage of revenue. Think about that. That's at over 8% for the US. Do you know only the United Kingdom is higher than the United States? And Canada is the only other country whose interest expense is greater than 4% of revenues. Folks, that's not good. So there is a really, really good chance that you are going to pay a lot more in tax in the near future. In fact, according to a recent article in the Wall Street Journal, taxpayers at all levels are in danger of a pending tax hike. I suggest you accept this and prepare for it. Now, when you look back at history, taxes have been on sale. The highest federal tax bracket today, it's 37%. But if you go back in time, let's go to 1981. The highest tax bracket, that was 70%, almost twice. So there's a lot of room where our government could make adjustments to the tax brackets. And in retirement, it's hard to hide from tax increases. You've got taxes on your IRA, taxes on your 401k, taxes on your Social Security income, taxes on your investment income. Now, I personally do not believe that taxes are going to go up to 70%. But there is a huge difference between 37% and 70%. So there's a lot of room for our government to make some changes when it comes to taxes, and I want to help you to prevent yourself from getting caught in this trap. So, if you are planning to retire in, say, the next 5 years, these tax increases, they could hit you just as you're retiring. And here at Cornerstone Wealth Management, we focus on those who are planning to retire within 5 years, as well as those who have already retired. And when we meet with folks, we help them to look at their specific situation, and we walk them through what they're facing. One of the great benefits of this is that it helps them to see and understand in their specific situation how these tax increases will impact them. So here's an example. Take your IRA and 401k. You've been told that those are great places to put your money when you're working. And it is so easy to do that as well. When you're working, every couple of weeks, the money, it automatically comes out of your paycheck and goes into your account. You even get a tax deduction when the money goes into your account. And you may have been doing this for 20, 30, 40 years, and many people don't realize that they have not paid tax on these accounts. And these higher taxes, they could end up being a huge chunk out of what you're expecting in retirement, which could then result in your hard-earned savings being a small fraction of what you hoped you would have all through those retirement years. Many tax experts and economists, they believe that we could see massive tax increases to pay for the trillions of dollars in government debt, which is growing by about $2 trillion a year, and that's why we want to help. So here at Cornerstone Wealth Management, we're passionate about helping families avoid these tax traps. So we're going to show you how you can reduce, and sometimes, in some cases, how you can actually eliminate your taxes in retirement with our free Cornerstone Retirement Tax Analysis. So here's how this works. When you come in, we'll get some basic information from you. And then we'll determine the specific strategies that work best for your situation. Then we'll sit down and we'll share these strategies with you so you can understand exactly how much money you can save in retirement. Now, we're not talking about saving a few dollars on a few simple deductions. These tax strategies, they could save you tens of thousands, if not hundreds of thousands of dollars in your retirement. Here's the best part. It's free, there's no obligation. But you do have a short window of opportunity to take advantage of these tax planning strategies. So don't wait, give us a call. And coming up next, we're going to take a look at the ticking tax bomb that's hidden in your retirement savings. We'll be right back.
At Cornerstone, we believe you should be able to enjoy the retirement you have always wanted. To help you see your retirement strategy from all angles, we created a retirement roadmap, which is designed to help you discover the knowledge you need to take control of your money and live a confident retirement regardless of what challenges arise. So you envision the life you want to live, and we can help you create a plan that leads you down that path. Join us for a conversation about your vision for your ideal retirement by calling the trusted professionals at Cornerstone.
Approaching retirement requires a shift in how you view your investment and income portfolio. Are you making the transition successfully? Author Chris Abts, in his latest book, Maximizing Your Income, will show you how to structure your income while avoiding 10 retirement pitfalls. You'll also learn 3 strategies to create sustainable retirement income. Learn to plan for potential healthcare costs and how to avoid 4 common yet costly Social Security mistakes. The information you gain from this book may help you retire sooner and help you stay retired. Get your complimentary copy today at maximizingyouриncome.com and take control of your retirement.
Could your tax bill in retirement be larger than you think? Taxes can play a significant role in retirement. After all, they determine how much of your hard-earned savings you get to keep and how much you send to the IRS. If you're like many savers, you may not know the total amount of taxes you could potentially pay. I believe information is critical to making informed decisions about retirement. If you agree, I want to share a resource that can help. Use your phone camera to scan this QR code. It will take you to a page that generates a quick report that can help evaluate your potential tax bill in retirement.
Behind every photograph is a story. How will your life story be told?
We got the house of our dreams. Thank you for the down payment, Mom and Dad. It helps so much.
20 years ago, I remember hugging you just like this, Dad. Thank you for teaching me strength.
Say hello to Emma. Mom, you gained the title Grandma and a new best friend. She has your eyes, and I know she'll have your heart.
Create a legacy, a story worth telling. To learn how, call 853-9033.
You're watching Redefining Retirement, where you can count on straightforward and objective advice on how you can make the most out of every dollar you save for retirement. Today, we're learning about 3 retirement tax traps that could literally wipe out your hard-earned savings. Now, before the break, we revealed the first one. So let's jump into the second one. So the second tax trap is that you could needlessly trigger an avalanche of taxes when you withdraw money from your IRA or your 401k or your other retirement accounts all throughout your retirement years. Now, we live in a beautiful place, and we've got Lake Tahoe right in our backyard, and we have some of the best ski resorts in the world. Now, I love to ski here with my friends and family, but with so many powder days, what we want to avoid is an avalanche, which unfortunately happens to a few skiers most years. Now, all too often, those skiers are taking too much risk. Now, the same goes for your IRA and your 401k. You want to avoid taking too much risk to accounts that are likely some of your biggest assets that are designed to help you to pay for your retirement. But it's so easy to contribute money to these retirement accounts. You make an automatic contribution from your paycheck every 2 weeks. You make your investment selection from a drop-down menu or box on a website. And then the best part, the government, they give you a tax break. But then when you retire and you begin to withdraw this money from your IRA or 401k, it is a totally different story. Now, one of the things we see when people come to Lake Tahoe to ski for the first time, all too often, you've seen it. They look up at the mountain, they see how steep it is, and they're really saying to themselves, hey, this is really complicated. This isn't like that bunny hill that I grew up skiing at some other place. And I relate that to taxes in retirement, because this is where things can get really complicated, because without even realizing it, you could literally trigger higher taxes on your retirement accounts, higher taxes on your Social Security income benefits, higher taxes on your investment income, higher Medicare premiums, and the list goes on. So this is literally an area where you can make a lot of mistakes, big mistakes. This is not the do-it-yourself area here. We've helped thousands of families retire successfully. And one of the most common mistakes that we see is overconfidence. Recently, we had a couple come in our office. They had saved over $3 million for their retirement. And you'd think, hey, they've got to be enjoying retirement. But this overconfidence, it was a big mistake. You see, when we sat down with them and we looked at their accounts, almost everything they had saved was in their IRAs and their 401ks. Now, that's great that they had saved that much. I mean, good for them. But the bad news is that they still owe Uncle Sam his fair share of those accounts. And when we ran a tax analysis for them, about 30, 40, maybe even 50% of that money could end up going to Uncle Sam. Think about that. So that $3 million that they have saved for retirement could be a whole lot less than what they were planning on. And that overconfidence is what we want to help you avoid in retirement. Now, here's the good news. We're your guides. So as we take you up on that ski hill, we can take you away from that dangerous avalanche area of taxes. And we can help you by giving you ways to pay less, probably tens of thousands, if not hundreds of thousands of dollars less in tax in retirement. So when it comes to your tax-deferred accounts like your IRA and your 401k, one of the problems here is these types of accounts, they're subject to required minimum distributions, or what most people call RMDs. So when you reach your 70s, the IRS forces you to withdraw the money in those retirement accounts. Now, whether you need the money or not, and whether the stock market is up or down, you must begin to withdraw that money each and every year. I recently came across an article that said when RMDs kick in, it can force account owners to take out more money out of their IRAs than they want or need to avoid onerous tax penalties. And retirees who have oversaved in their IRAs, yep, that's a thing. So retirees who have oversaved in their IRAs will eventually have RMDs that get taxed at a higher rate than necessary. So clearly, this is something that you want to make sure to avoid because the penalties are significant. Now, here's another downside to RMDs that I want you to watch out for. Your RMDs could set off a chain of events that could push you into a higher tax bracket. Now, when you think about all the years that you've set money aside in your IRAs, in your 401ks, and in your Social Security accounts, those RMDs could force you to sell those investments at a loss. Now, if that happens, you'll never get that money back again. So, for example, if the stock market drops by 20% and you were withdrawing money at that time, that money, it's never coming back. And if you don't follow these withdrawal rules to a T, then you could trigger a 50% tax penalty, which just happens to be the highest tax penalty levied by the IRS. You don't want to get into that mess. So the sooner you address these required minimum distributions, these RMDs, the options you have will be so much better. You'll have more options. And in my experience, I always find it's better to address this way before you reach your RMD age. Now, when you look at your IRA or your 401k statement, you think about this as your money. I know that's how you think about it, but in reality, it's not your money. Your IRA or 401k is a joint account between you and the IRS. And with the threat of higher taxes right around the corner, you could be paying a lot more in tax than you realize, which could leave you with a small fraction of your retirement savings. Now, the good news is this. If you take advantage of some of these simple tax planning strategies today, you could save tens of thousands, if not hundreds of thousands of dollars. That's why we put something together for you today. I want you to learn how you could reduce or eliminate the taxes in your IRA or your 401k with a free, customized Cornerstone retirement tax analysis. So here's how this works. First, we'll get some basic information from you. Then we'll determine the tax saving strategies that are best suited for your specific situation. We'll then sit down with you and we'll share these strategies with you so that you can see exactly how much money you could save. Now, the good news, these strategies, they're not complicated. In fact, most of these tax strategies, they're available to almost everyone, not just the ultra wealthy. Now, in reality, you probably just don't know that they exist, or maybe you're just not taking advantage of them. Now, there's no cost, there's no obligation. So if you saved at least $250,000 for your retirement, call and schedule your free analysis today. You have a short window of opportunity to take advantage of these tax planning strategies, so don't wait. And coming up after the break, could you be taxed on your Social Security benefits? I'll have that answer when we return. Could your tax bill in retirement be larger than you think? Taxes can play a significant role in retirement. After all, they determine how much of your hard-earned savings you get to keep and how much you send to the IRS. If you're like many savers, you may not know the total amount of taxes you could potentially pay. I believe information is critical to making informed decisions about retirement. If you agree, I want to share a resource that can help. Use your phone camera to scan this QR code. It will take you to a page that generates a quick report that can help evaluate your potential tax bill in retirement.
When you have confidence in your retirement future, you can live the life you've always imagined. Because of planning, You now have time to reflect on the wonderful memories of your life. Spend fun times with your grandkids, sharing the joy of their excitement about life. At last, you have time to breathe and rekindle the love of your life. Why? Because you imagined what could be. You planned for retirement. So today, you own your future.
For trustworthy fiduciary-based guidance, call 775-853-9033.
Welcome back. You're watching Redefining Retirement, where you can count on straightforward and objective advice on how you can make your money go a lot further in retirement. Now today, we're looking at 3 retirement tax traps that could needlessly wipe out your hard-earned savings. We've covered the first 2, so let's jump into the third and final tax trap that we'll look at today, and that is referred to as the tax torpedo. Now, it's called the tax torpedo because it can force you to pay taxes on up to 85% of your Social Security benefits. Now, I want you to think about that for a minute. You worked hard for 20, 30, 40 years, putting 6.2% of your paycheck into the Social Security system. And then your employer matches your contribution by putting into your account another 6.2%. So that's a total of 12.4% of your annual earnings every year being added into Social Security on your behalf. And then when you retire and you begin to take your benefits, you then learn that you could be taxed on as much as 85% of your Social Security check. So think about that. So the Social Security tax torpedo, it simply refers to the fact that each additional dollar of income in retirement makes 85 cents of your Social Security makes that taxed. And without even realizing it, you can find yourself being pushed into a higher tax bracket without adding any additional income. You know, we've helped thousands of families right here in Northern Nevada make an informed decision on how and when to claim their Social Security benefits. And I would say the number one shocker, the tax torpedo, is that most people have absolutely no idea how much they will pay in tax on their Social Security benefits. You know, this is why filing for your Social Security benefits could be one of the largest financial decisions of your retirement planning phase. And the reason why is that there are literally hundreds of thousands of dollars at stake here for you and your family. And the reality is that most people say something like, hey, I spoke with my brother who just retired. Or maybe I talked to a coworker around the water cooler at work. You know, maybe I spoke with my buddy. And I have a pretty good idea of what I want to do in retirement with my Social Security, how I want to turn it on, how I want to claim that. So you've given it some thought. You've done your homework, you've done your research, and you're feeling pretty good about how and when you're going to take your Social Security benefits. But you may be surprised to learn that, again, you could pay tax on as much as 85% of your Social Security benefits. So again, the money that you were counting on to support you through 20, 30, 40 years of retirement could end up being a small fraction of what you thought it was going to be. Now, you do not want that surprise to happen. And the biggest mistake you can make to trigger these higher taxes is to rely on one of those one-size-fits-all strategy. The fact is this. If you rely on some one-size-fits-all strategy for claiming your Social Security benefits, it's quite possible that you could end up making the wrong decision, which obviously can cost you. Now, this is common sense, and it pretty much applies to most everything in life. You know, take a pair of jeans as an example. One size does not fit all. You've got all sorts of waist sizes and inseams. You've got different brands, different styles, different colors and designs. You've got hip jeans, you've got dad jeans. And what works for you likely does not work for someone else. And the same is true with your Social Security benefits. So here's an example. Some people think that you should wait until you are 70 because that's going to be your biggest check. But the problem is that it doesn't tell the whole story. See, the real story is that in some cases, delaying your benefits could end up costing you a small fortune, and we definitely don't want that to happen to you. So here's something else that can happen with Social Security. The strategy you choose could end up triggering higher taxes, higher Medicare premiums, and could also cause you to forfeit thousands of dollars in other benefits as well, which then results in far less money that you get to have to enjoy during your retirement. We see this scenario play out all too often, and I don't want that to happen to you. So to prevent this from happening to you, there's some little known strategies that you could use to reduce or eliminate the tax in your Social Security benefits so that you get to keep more of your Social Security income benefit. Did you know that there are 2,728 rules in the Social Security Handbook, and then thousands of rules that then pivot off of those rules? So if you hope to retire in, say, the next 5 years, taxes could literally be the single biggest threat to your financial security. But if you take advantage of some defensive tax planning strategies now, today, you can literally lock in a windfall of tax saving strategies in your retirement. See, these savings, they could end up saving you tens of thousands, if not hundreds of thousands of dollars. So I want you to learn how to get the most income when you file with Social Security, when you claim your benefit, as well as how you could reduce or eliminate the taxes on your Social Security income with their free, customized Social Security analysis. So this will show you how you can reduce, or even in some cases, how you can eliminate paying taxes on your Social Security benefit. It will also show you how you can avoid doubling your Medicare premiums, which we see all too often. It will also help you to identify the optimal time to file for Social Security to get even more income, as well as determine if you're eligible for other benefits that could mean thousands of dollars in your pocket each and every year. Now here's the great news. This analysis, it's free, and there's no obligation. So if you've saved at least $250,000 for your retirement, and you have not filed for Social Security, give us a call now to get this free analysis. Here's the bottom line. Filing for Social Security, it will likely be one of the most important financial decisions of your retirement planning phase because hundreds of thousands of dollars are at stake. So don't take that risk. Instead, get this free Social Security analysis that can help ensure that you wring every nickel out of your benefit that's rightfully yours. All right, that's our show for this week. Thanks for watching, and I look forward to seeing you next week.
Jolly good show.